Hey friends, thanks so much for joining today. It's Bitcoin Halving Day, which is a pretty big deal, as many of y'all know. This is only the fourth Bitcoin halving in total in Bitcoin's more than 15-year history. So that's a big deal, and we're going to talk about what that means. And today, I especially want to focus on helping beginners get ready for this halving cycle, which kicks off today with the actual halving. So if you're a more advanced cryptocurrency trader, that's awesome. Welcome. And I'm very happy to talk about anything y'all want to talk about as well. But I really wanted to be intentional and to state that this is meant for beginners, at least in the early part of this conversation, because I don't want cryptocurrency beginners, especially women, because I see this often, feel discouraged or feel like you can't ask questions or you don't know where to start. So I kind of want to dial it back and really begin from where I think you need to begin from when you're stepping into the world of cryptocurrency. So, if we don't know one another, hi, Cecilia, welcome. I'm Rachel. I'm the founder of Seeds. Seeds is a mutual aid project which has helped people in need in 30 countries and counting so far, with a focus on helping women. And we essentially want to transcend what's messed up in the old system, and that's possible now because of blockchain technology. When you help someone in need through Seeds, you get Seeds cryptocurrency. And thanks, because we think a better system by design allows people to build wealth through giving. You can also use Seeds to ask for help when you need it as well. So the whole reason I talk about cryptocurrency generally is because I want good giving people to benefit from these cycles, because we've seen a lot of not great energy in that sector to date. We've seen a lot of people who are not trying to make the world better benefit from cryptocurrency, and some of them have gotten very rich in cryptocurrency. So my intention is to bring this to people who are working in social good, to artists, to anyone with a lot of healthy feminine energy who is, working to do what you can to make this world a better place. This is meant for you, and that's also why Seeds exists as well. I come from a background in which I was a former professional stock trader in Chicago and on Wall Street before the misogyny drove me to quit. And when I discovered Bitcoin in 2013 and started buying Bitcoin in 2013, it was so exciting to me because I could see that this technology could make it possible to transcend the misogyny and the racism and the other forms of discrimination that were built into the old system by design. That's what Seeds is working to do, and that's why I'm talking to you about cryptocurrency today. That's very much the intention of what that is. So it's not just about like hyping crypto. I mean, you can find a lot of people on YouTube, certainly, and just out there generally, who are not coming to cryptocurrency with the intention of trying to make the world a better place. You know what I'm saying? So I think it's really important that I'm clear about that intention from the start. So, with that in mind, I should also mention that we have a course coming up called How to Build Abundance in Cryptocurrency. It's closing tomorrow. Tomorrow, as many of y'all know, is also the date of the Jupiter Uranus conjunction in Taurus, which I find fascinating. The fact that that is so, it's nearly simultaneous with the Bitcoin halving. And our course by design is closing right around this time because, as I said earlier, the Bitcoin halving has kicked off the market cycles that we've seen in the past. So, we want to be helping people to get ready at this time. If you're interested in the course, the link is in the description and I'll throw it in the chat as well. But yeah, it's effectively free when you sign up because you receive Seeds cryptocurrency and thanks. And it's effectively free when you pay up front. I teach the course, so I bring in my experience as a former pro stock trader who started buying Bitcoin in 2013 and founded a cryptocurrency ecosystem. And the course sustains our project Seeds so that we can ensure that 100% of the gifts that come through Seeds go to people in need around the world. So it's meant to be a win-win-win all around. So I'll throw that link in the chat. Again, it closes tomorrow at midnight, just before midnight Pacific time. What's up, Tin Top? All right, y'all, let's look at the countdown. So here we go. We can see now that so when the halving is happening, for those who are unfamiliar, and again, I want this to be sort of targeting beginners. When that happens, the moment that it happens, we can see here that it's now predicted to happen today, April 19th at 6:02 p.m. Pacific time. You'll see if you keep an eye on this countdown that predicted moment in time has changed over the course of, I mean, this website has existed for a long time. It changes because the halving happens when a specific block in the Bitcoin blockchain is mined. The only reason, in a practical sense, that you really need to be aware of this as a cryptocurrency trader, um, I'll say that there are two reasons. The most important reason is because historically, we've seen that this moment, the Bitcoin halving, has kicked off the cryptocurrency market cycles that have happened in the past, in which prices have gone up a fuck ton, like an enormous amount. And so this is a very important juncture. So we can take a look at the history of that a little bit as well. Um, so for viewing this, we can see, as mentioned, this is the fourth Bitcoin halving in total. Bitcoin is over 15 years old. The Genesis block, the first Bitcoin block on the blockchain, was mined on January 12th of 2009. Okay? And then the halvings happen roughly every 4 years. And whenever a halving happens, this is sort of the second thing that it's worth being aware of as a cryptocurrency trader. It's called the halving because the reward that is generated to the ecosystem um, is cut in half at that moment in time. So we can see here that with the first halving, which happened on November 28th of 2012, the block reward went from 50 Bitcoin to 25 Bitcoin. And this is relevant because this is the way the Bitcoin ecosystem generates Bitcoin. It's issuing these rewards to what are called Bitcoin miners, who are effectively solving complex cryptographic math problems to secure the ecosystem in a decentralized fashion. We don't have to rely on like a government or a bank to secure the Bitcoin network because it's decentralized. There's no centralized governing authority that's taking care of that for us. And by design, the solution that the Bitcoin founder or founders came up with, those people remain anonymous today. We still don't know who the Bitcoin founder is, had to do with using these block rewards, essentially. So with every halving, that reward has been cut in half. And that's relevant to you as a crypto trader because it means that suddenly half as much Bitcoin is being generated with every block that is mined. So that means that we're reducing the supply of Bitcoin that are being generated. And therefore, like in an old school economic sense, what we'll often see is that when there's a reduced supply, the demand can go up, which drives prices up. And that's what's happened in previous halving cycles. So if we take a look at the history here again, we can see that with the first halving in November of 2012, the block reward went from 50 Bitcoin to 25 Bitcoin. The price at the date of the halving, so again, the fourth halving is literally today. The price at the date of the first halving was $12.40. If we're taking a look at the price right now, we'll do that real quick. So literally at this moment in time, Bitcoin is trading at $64,000, $64,304.28. So back in the day, when we had the first halving, it was $12.40, right? So that's a huge increase in a relatively short amount of time. I don't think I'm aware of another asset outside of the cryptocurrency sector, because there have been other cryptocurrencies that have outperformed Bitcoin at different times. I'm not aware of anything else that has offered returns like that to like the average retail customer like you or me, a person who isn't investing in startups or tech, in early stage companies or something like that. So it's a big deal. And I really believe that this opportunity, the opportunity that cryptocurrency presents us to build wealth, like I don't know that we're going to see something like this again in our lifetimes. For real, it's a big deal. It's the internet of money, effectively, right? And we've seen what the internet has been able to do in a relatively short amount of time. So the second halving was on July 9th of 2016, and we can see that the price on the date of the halving was $680 a coin. And the third was in May of 2020, and at that time the price was $8,590 a coin. And then it's also important to take a look at this data at the bottom to give us a sense of the increases and the dates those increases happened within those previous Bitcoin halving cycles. Excuse me. So we can see that the lowest price for each of those cycles, in 2 out of 3 of these instances, the lowest price is the same price that we're seeing up here on the date of the halving, right? The exception is during the second halving cycle where the price dropped a little bit more the following month. The halving happened in July and the lowest price was hit in August, the next month. There were other reasons, other things happening in the sector at that time that contributed to that. I've talked about this before. I don't know how helpful it is to go into this for like from a beginner's standpoint. Basically, there was an issue with the Ethereum network. Ethereum is the second largest cryptocurrency, the second largest crypto network, I should say. Their cryptocurrency is called Ether. And they had a technical issue that they needed to address. And that caused uncertainty in the sector, which affected Bitcoin's price at that time as well. So I would say that that's the key reason that prices didn't just begin continuing upward after the halving in that second cycle. So this is a really important juncture, is the point. You know, the history shows us that the lowest prices were right around the date of the halving. Today is literally the date of the halving. So I want good people to be getting involved in cryptocurrency because, you know, there's this likelihood that if you're getting involved around now, you're going to be catching it at perhaps the lowest price in this market cycle. And it's gone up a hell of a lot in previous market cycles. And it isn't just Bitcoin. Bitcoin's important to pay attention to because it still has an outsized effect on every cryptocurrency there is. It really impacts the prices of cryptocurrencies across the sector. But there are other cryptocurrencies you can get involved in. And we've actually seen in past cycles that cheaper cryptocurrencies, other than Bitcoin, have been better investments in terms of the returns that you can get if you bought some of these other cheaper cryptocurrencies. A myth that I want to dispel that I see people talk about if they're unfamiliar with cryptocurrency is that you do not have to buy an entire Bitcoin. How many people, I mean, there are going to be very few of us, right, that are able to shell out $63,000 to buy an entire Bitcoin. You can buy tiny fractions of these cryptocurrencies, and that's great. So, a more useful way to frame the way you're thinking about this, I would say, is to first of all, you want to ground this in your personal situation. So, sort of the number one rule of thumb that you want to, from which I would say you want to approach cryptocurrency trading and any kind of trading that you're doing, is that you never want to invest more than you would be totally okay to lose, right? Of course, we never want to lose funds. That's always painful when it happens, but you never ever want to overextend yourself, you know, where you're putting yourself in a position in which if a trade goes against you or doesn't go your way or doesn't go up as quickly as you might have hoped, that you're then in a situation in which you can't afford to cover your basic expenses, right? So when I teach the course, How to Build Abundance in Cryptocurrency, one of the exercises I ask people to do is to take a really honest look at your finances and to assess, like, okay, how much can you really afford to put into this? And how much would you like to put into this at this particular stage? So that could be a lump sum. You may realize that you have the savings or you have, you know, some funds allocated to something else that you think probably isn't going to perform as well as it would if you move that money into cryptocurrency. So maybe who knows what that amount would be? Maybe you have $5,000 in like chilling in a savings account or something and you're getting a shitty interest rate in return. Maybe you have something allocated into, say, mutual funds or something like that, a safer, lower interest return sort of investment. Diversification is always encouraged when you're investing. It's generally a good idea to have your money in different vehicles in case something is performing well at a certain moment in time and something isn't at that moment in time. So maybe you don't have a lump sum that you want to put toward cryptocurrency. That's totally cool. That's very normal. But maybe when you're looking at your finances, you realize, like, well, actually, I have an extra $300 a month, and I'd really like to be allocating that toward cryptocurrency investing because you know that the Bitcoin halving is today, and that, historically that's been the low point in previous market cycles. So that's great. If you know that that's the case, then you can set things up so that that $300 is, even automatically being allocated toward cryptocurrency investing. And you can set it and forget it with tools like DCA, dollar cost averaging. And that can be a great sort of easy, low touch way to start getting involved. And you can do that. You can set that up today if you wanted to. Um, yeah, so that's super important. I can't stress that enough. You never, ever, ever want to be investing more than you would be totally okay to lose. That's sort of, yeah, just especially when you're a newer trader. If you're more experienced, maybe you're margin trading or something, and you can start stepping into that world of taking on more risk, but certainly not when you're a beginner. Like, you just really don't want to get into that position. And a big part of the reason for that is when a position goes against you. If, say, you had a lump sum, you had $5,000 and you decided to put that into Bitcoin and Ether right now, and then suddenly Bitcoin dropped in price. It went back down to $55,000 a coin or something. That can feel very painful and very stressful, especially if you're a newer trader, and it can make you want to sell at a loss. Um, and that can be even more sort of stark if you're in a position where you've overextended yourself and you're worried it's going to get worse and you just want to get out. So we want to create a situation for ourselves in which panic trading is at a minimum. When I used to be a pro stock trader, I quickly came to realize that this idea of managing my panic as a trader was kind of the most important lesson that I was learning experientially through the act of trading. And I can't stress enough the importance of the experiential learning piece when it comes to trading. Whenever we teach the course How to Build Abundance in Cryptocurrency, live trading sessions where students are encouraged to trade with me, to make trades themselves, to talk about their thought process and getting into those trades, that's super strongly encouraged because more so than most things in life as a human, I would say that learning to trade, whether it's cryptocurrency or anything else, stocks or whatever, but I'd say especially cryptocurrency, you really need to do it. You learn through the experience of trading. And we've had people come through the course in the past who didn't take those actions, who didn't sort of build that muscle that just develops as you're making more trades, as you're learning more about how to move through something if it's going against you, as you learn that, for example, if you still believe in the idea, you still believe in the cryptocurrency, but the prices come down, if you're not panic trading, you can recognize that those moments are often the best opportunities to buy more because it's cheaper, right? If you still believe that it's going to head up longer term. But brand new traders who are panic trading will see a price drop and then they'll freak out and want to get out of the position, and then that's when you can lose money. So the experience of doing that, of taking those actions and making those trades, the importance of that cannot be overstated. And it's really something you need to do. Feeling the pain of a loss even can be one of the most valuable learning experiences that you can have as a trader. But we want to mitigate that as much as possible, right? Especially if you're not able to trade actively. If you're not somebody, who's able to look at the market a bunch of times a day, like most people aren't going to be able to do because we have other responsibilities, something like dollar cost averaging, DCA, can be a great way to start exposing yourself to the world of cryptocurrency. Again, in this low touch fashion that doesn't require a lot of trading knowledge or sort of an active trading habit. Um, and if you like helping people in need and you want to do that while DCAing, effectively dollar cost averaging, you can also set up automatic gifts through Seeds, recurring gifts. We have weekly, monthly, and annual gifts that you can set up through Seeds. Whenever you make a gift through Seeds, you get Seeds cryptocurrency per the market value at the moment in time you gave. So, like, if you wanted to help out, these are some kids in Haiti that we helped out a while ago so they could continue going to school. If you had sent $25 to help out these kids, you would have gotten $25 worth of seeds or more because there are additional bonuses at market price at that moment in time. So the idea there is it's just like DCA. You're getting in at different prices and you're setting that up in an automated fashion so that you're putting the $25 or whatever it is in on a weekly or monthly or even annual basis. So that can be an option too if you like the idea of helping folks out while getting exposure to cryptocurrency at the same time. So yeah, so there's that. So if we're looking at this again from a beginner perspective, let's stress that the halving is today. We know again that historically, we'll look at this one more time, that historically the lowest price in Bitcoin has typically been either on the day of the halving or around the date of the halving, because we had in one instance with the second halving again in July of 2016, the lowest price was actually a month later. So we know that, right? So from a beginner perspective, it stands to reason, even though we know that past performance doesn't guarantee future results, etc. Excuse me. It stands to reason that this literally today may be the lowest price that we'll see in Bitcoin and perhaps in other cryptocurrencies as well for this market cycle for the next 4-ish years. So that's a very potentially valuable piece of information to have, right? And I've shared this before, but in addition to this, like this history and the way this can help to impact our decisions, um, outside of this particular market cycle is really significant because we've actually already broken all-time highs in Bitcoin 4 times in 2024 alone. So that's an anomaly. That hasn't happened previously. And it's a direct result of the fact that Bitcoin ETFs, exchange traded funds, so effectively Bitcoin stocks, were approved in the United States in January of this year. So I'm sharing that because as a beginner and just generally as a crypto trader, this is helpful to know because it indicates that there is an additional uh, bullish force, an additional force that's likely to drive prices upward this market cycle because more mainstream investors who maybe trade the stock market but hadn't gotten involved in cryptocurrency in the past, they now have this more familiar way of getting some exposure to Bitcoin. So that's a huge deal, y'all. Like I've said this before, I always worry about being redundant because with lives it's weird because you don't know necessarily who's coming and who's heard you speak before and who's here that's completely new. Um, but this is a big deal because in my experience as somebody who started buying Bitcoin in 2013 in the first halving cycle, um, and I got out very near highs at the end of that cycle, I've never seen it look this strong. There are certainly complicating factors. There's still regulatory lack of clarity in the United States. There was supposed to be an Ethereum ETF, exchange traded fund, um, in May of this year. It looks like there's going to be a legal battle surrounding that the last I checked. But there are other forms of effectively Bitcoin and Ether stocks that are appearing on other stock exchanges globally. So this just looks super strong is what I'm trying to say. It looks stronger to me than it's ever looked in the past, because we have these like additional factors that are making it likely that more and more people will buy because it's becoming easier to buy in ways that are more familiar to mainstream people. So y'all, that's like, if you take away nothing else from this conversation today, please recognize that this looks to be a very special moment in time, like literally today, right around this time. So knowing that, then you're probably coming from a position where you're going to be like, okay, but like what cryptocurrency should I trade? Like, should I just get into Bitcoin? What should I do? So I would suggest doing 2 things first of all to get started. The first is I would suggest that you get set up on a centralized cryptocurrency exchange. None of them are good. I have not had a good experience with a single one. Like some of them are straight up kind of evil. I could tell you stories about bad experiences that I've had on Coinbase. I'm still recommending Coinbase at this moment in time because I think the product is of decent enough quality. It's widely used around the world, particularly in North America. And yeah, I don't think you're going to be at any risk of getting hacked if you're using Coinbase. Please know though that they treat their customers like shit. So we want to use centralized exchanges like Coinbase because we have no other choice when we're buying cryptocurrency with fiat currency like the US dollar. Unless you're helping someone in need through seeds, then you can do so with a card and receive seeds cryptocurrency and you don't have to mess with the centralized exchange. But you're probably going to want something set up to make it easy for you to buy a wide variety of different cryptocurrencies with fiat currency like the dollar. So that's the benefit that using a centralized exchange can offer. And you can set up DCA, dollar cost averaging, on a platform like Coinbase as well. So there's that. So I would suggest getting set up on a centralized exchange like Coinbase, like ASAP. I don't know how long it's going to take you to do this. It may be as little as 30 minutes. It used to be quite fast to do this, but as the regulatory environment has changed over time, sometimes there are annoying delays. The thing about centralized exchanges is that they're verifying your identity, and it's regulated in the way that many other centralized exchanges, like exchanges that you would use to trade stocks, are regulated. They haven't been regulated enough. However, if you saw anything in the news about the collapse of FTX in late 2022, that was a centralized exchange that failed for reasons that are they failed for the same reason that banks have failed for hundreds of years, although that wasn't discussed much in the media. Cryptocurrency generally was just abused and like cited as the problem when that wasn't the case. That's another reason we want to get our funds off of centralized exchanges as soon as possible and into self-custody wallets, which I'll talk a bit about here in a second. Um, but what I'm trying to say is that there is regulation surrounding centralized exchanges. It should be getting more robust in a way that's actually protective of consumers because of disasters like FTX. But at the end of the day, I think of it as, like this is a tool that we just have to use because it's a necessary evil kind of at this stage of the game. And so we can use it and get benefit from it and then move our funds off of it as soon as possible. So there's that. So yeah, I would say Coinbase.com. I wouldn't even say that they're the least worst cryptocurrency, centralized cryptocurrency exchange. Probably Gemini is arguably that in my experience. I would really discourage you from using Binance unless there's a cryptocurrency on that platform that you really want to buy that you can't get anywhere else. I'm recommending Coinbase here because I think their user experience is friendlier. I think it's easier for beginners to just hop on board and start using it and kind of understand what you're seeing. Their UX is a little bit friendlier and just better. So with all that said, just remember their customer service is garbage. So just get your funds off of their platform as soon as possible is what I would strongly encourage you to do. And when you're doing that, the way I would suggest doing that is by setting up what's called a self-custody wallet and then moving your funds into that self-custody wallet. So I'm going to recommend the Coinbase Wallet self-custody tool for this purpose as well. You can see the URL there. It's just coinbase.com/wallet. It's really important to have clarity around what a self-custody wallet is. They're called self-custody because they allow us to hold on to the funds ourselves. And they only invented this term like 2 years ago. They used to be called something else that was more confusing. This is really important because if we have our funds in a self-custody wallet, then disasters like happened with FTX, with BlockFi, Celsius, Voyager, those are sort of the more recent centralized cryptocurrency failures. Back in the day, it was a platform called Mt. Gox in like 2014. Same problem. Literally, the problem that has led to bank failures has also afflicted centralized cryptocurrency exchanges because they would have custody of our money and then they would invest our money somewhere else with the intention of trying to make a better return than they're paying us. And then what these exchanges have done is they've fucked up basically and invested those funds poorly and there's volatility in the market, and then they couldn't cover customer withdrawals, and then people would freak out and they would recognize that, like, oh, we need to get our funds off of this exchange because it looks like it's going to go under, and then many people wouldn't be able to do so because the funds just weren't there. It's the same, it's like the same thing that would happen during an old school bank run. So in order to avoid that, even with relatively reputable centralized exchanges like Coinbase or Gemini, we can just move our funds off of those platforms and into a self-custody wallet. We know it's a self-custody wallet if we have access to the private key and or the mnemonic device for that wallet. So if you don't have that, if you don't have the private key, it's not a self-custody wallet. Coinbase Wallet uses a mnemonic, so that's the same principle. We want to make sure to store that in a secure place. You can store it offline. Sometimes, this is more like back in the day, OG kind of thing, but like people would literally print out their private keys or mnemonics and like put it in a safe deposit box or something. There are various measures you can take to secure your wallet. You'll hear about what are called hardware wallets like Trezor or Ledger. I've never found those to be necessary. We can actually look at that real quick. Like, these are Trezor and Ledger, I would say, are the best known hardware wallets. You can see that they're going to charge you $180 or so, maybe a little less. I personally have never found that to be, it's never mattered. I've never felt the need to spend that money to get a hardware wallet. The added security that that's supposed to provide is dubious based on what I know right now and based on my experience in the last 11 years or whatever in the sector. So you can literally, if you want added security, what I do is I'll use what's called a multi-sig wallet. So this is arguably maybe the most reliable, the Gnosis Safe wallet. And you can set things up so that multiple wallets have to sign in order to authorize a transaction in your wallet. But this is getting beyond sort of like beginner level, I would say. You don't have to worry about this if you're just trying to get involved and if you're just trying to make sure you're taking advantage of this moment in time because the Bitcoin halving is today. But it's worth knowing that, I mean, I see a lot of beginners immediately thinking that they should buy a hardware wallet. And I just want to stress that I haven't seen that to be necessary for me. And sometimes I've known about instances where things went wrong with hardware wallets and people lost access to their crypto when it was stored on a hardware wallet. So again, in my estimation and in my experience, that has been necessary. Okay, so you want to set up the self-custody wallet. If you're using a tool like Coinbase Wallet, their self-custody tool, it's literally a mobile app, so you can set it up pretty easily. Yeah, and then you'll just have the mnemonic. Now you can create like names for your wallet, like people would do on Venmo or something, so that they don't have to, you're not copy pasting a long wallet address in the way that you would have had to do in the past necessarily. You can set up an ID or whatever for that wallet address, so that can be simpler. So yeah, that's what I would say to beginners just getting started right now to get ready. Again, know that this is a special moment in time because the halving is today. Again, we know that low prices were either at the date of the halving or very near the date of the halving. And then you want to get set up on a centralized exchange so you can buy cryptocurrency with fiat currency like the dollar or the GBP or the peso or the yen or whatever currency you're using locally. And then you want to get set up in a self-custody wallet like Coinbase Wallet's tool so that as soon as you buy on those centralized exchanges, you can move that into your self-custody wallet so it's off of that exchange. If you do that, I think you're going to be that's a good foundation, a good starting point to then start looking at more advanced strategies and so forth. All right, I'm going to hop in the chat. Okay, Jen says, would you consider buying ADA, DOT, or AVAX? If not, what other cryptos than Ether and BTC do you like invest in? So it depends. I mean, I've said this before. I guess I'll hop back over here. An exercise that I ask students to do in our course, How to Build Abundance in Cryptocurrency is the name of the course. I ask students to articulate your values and what you hope to achieve both like financially in a broad sense and also in terms of cryptocurrency investing. So, like, if we're taking me as an example, right? Since you're asking if I would be into these cryptos, so like my big value is like I hate the way things are right now. I struggle a lot with a lot of anger, frankly, about the construction of the economic system and societal construction and how much it denigrates feminine energy. And I think that's going to change in our lifetime. So I feel like this is an exciting time to be alive. But literally anything that is working to transcend the economic system and get us out of this weird zero sum paradigm, that's what I'm into. That's what I want to support. That's why I was initially interested in cryptocurrency. And back in the day when I got involved, it was like there were like 3 cryptocurrencies and Bitcoin was prominent. So that's why I'm interested in seeds. Seeds is our project, obviously, and that's the cryptocurrency I most want to support because it's actually working to get us out of this problem. But knowing that those are my values and having articulated that, that's going to guide me into other cryptocurrencies that align with that. And there really aren't very many. Ether is one because the energy has felt more feminine to me. And I think they're just doing things, it just feels better to me than virtually any other project out there. That said, I'm not above like just trading a cryptocurrency shorter term if I think it's going to be profitable and I can make some money off of it. So, for example, I did make an ADA trade back in, I think it must have been 2021, I want to say, because I knew that ADA was about to launch on, I think it was Gemini. So, when a cryptocurrency is about to launch on a new centralized exchange that they haven't been trading on previously, almost without exception, what you'll see is a big spike in price at the beginning. So I wanted to get in on that. So I loaded up on ADA. I bought it on whatever other platform I could get it on. And then I waited for that moment when it was going to launch on Gemini's platform. And then when the price spiked, I sold it. So I made that play. And then I haven't been messing around with ADA since then. And the reason for that is it doesn't align with those values that I stated because I know that like the ADA founder was a co-founder of Ether and he left the Ethereum project, and the approach that he decided to take, as I understand, was much more corporate-y. And I'm not into that. You know what I'm saying? Like I don't want to support that energy. So yeah, it just doesn't align with what I want to do. But that doesn't mean that if I didn't hear about another news event that made it likely that ADA would spike in price, that doesn't mean that I wouldn't trade it to try and make that profit. Yeah. So it's sort of a similar thing. I mean, I feel like Dot has better energy, but if we're talking about what's called like interoperability in between different blockchains, and this is not a beginner topic to be clear, I'm not sure how necessary that's going to be down the line. It seemed necessary in like 2017 or something. It seemed like, yeah, it'd be really smart to make a cryptocurrency project that allows us to move between the blockchains of different cryptocurrency projects. But at this stage of the game, I kind of don't think that's, I don't see use cases where that's been super valuable. Even though there have been a lot of Ethereum killers that came on the scene that were trying to build a better Ethereum, nobody has really achieved that so far. I would say that Ethereum is winning and has won. So, yeah, so that's the other thing. You can look at what the utility of a cryptocurrency is, what its stated purpose is. And if it seems like that isn't actually that useful, which is like actually super common. And it was especially common in like 2017 because so many different projects were launching on top of Ethereum and there were so many ICOs, initial coin offerings back at that time. There were a lot of projects that were just like, yo, we have a token, and the reason for the existence of their token didn't really make sense. So you can check that out and see if that applies to a cryptocurrency you're interested in. I'm not trying to shit on Polkadot overly, but though it did look like there was a utility for that back in the day, I think that's less the case more recently because it looks like Ethereum has won more so. And that for sure does not mean that Ethereum is perfect and that there aren't a lot of improvements that need to be made within that ecosystem. But that said, I also like I haven't kept up. I haven't seen anything in the news recently about what Dot is doing and if they're doing anything else that's more innovative. So if I saw something like that, it would make me more interested in getting involved in their project. Um, yeah. So if not, you're asking what other cryptos other than Ether and Bitcoin do you like slash invest in? So I don't invest in Bitcoin anymore because not for several years. I mean, actually, I'm thinking about it. I think the last real Bitcoin trade I made was in 2017, late 2017. I think this is kind of a fun fact, but back then there was a hard fork and what was called Bitcoin Classic was created. And what was awesome about that was that if you were holding Bitcoin at that time, you also got Bitcoin Classic. And Bitcoin Classic also launched on centralized exchanges, specifically on Coinbase. Like it was like December of 2017, as I recall. So there were multiple factors at work. Like suddenly I had this additional magic cryptocurrency just appear in my wallet, and it was launching on Coinbase, and it spiked because that's typically what happens when a new cryptocurrency launches on a centralized exchange. So I sold the Bitcoin Classic like near highs. It was actually a great trade, and then the price died after that. So I was holding Bitcoin then because if I hadn't been holding Bitcoin, like it was just awarded to people who had Bitcoin. No, I'm wrong. I think it was awarded to people who had Bitcoin in a specific period of time. So yeah, my last actual Bitcoin trade may have been even before that. So yeah, I haven't traded it in a long time because I found that other cryptocurrency projects are more interesting to me and more aligned with my values and whatever. And cheaper cryptocurrencies have been more profitable to invest in since the 2013 cycle even. I made a Litecoin trade in late 2013 that was way more profitable than the Bitcoin trade I made in late 2013. And that pattern has held up over cycles. So yeah, for me, in terms of values, this is a long ass answer. Hope that's okay with everybody. But yeah, I mean, I am interested in continuing to invest in Ether and Seeds, of course, because that's our project, and I want us to get out of late stage capitalism, and that's what Seeds is working to do. Beyond that, I'll just trade something if I see something in the news that makes it look compelling. If it looks like maybe there's going to be an airdrop or something, if I get involved in that token, I'll do that sometimes. Like in January, I got a Celestia airdrop that was worth like $3,400. And that was because I saw people talking about a potential airdrop, specifically in like the F Finance subreddit. That's like the only good quality subreddit that I think is out there relating to cryptocurrency right now, and it's getting worse actually. It wasn't so good lately. So that's really all I'm doing. There are very few cryptocurrencies that I'm like into in terms of what they're doing um, to change the world, and that's what I care about. I care about getting us out of this. Um, Stefan says having an 8 hours 50 minutes. Yeah, let's hop back in there because it's fun to have that countdown. 5 hours, this says now. 5 hours, 10 minutes. Oh, that's interesting. Stefan, where did you get that information then? Because you must be looking at a different countdown cycle than I am. Tintop says, how decentralized do you honestly believe Bitcoin actually is? Two major mining pools dependent on hardware from only one Chinese company, retail investors mainly using CEX, and not running nodes from home. Yeah, right? Like that's the other thing. That's a great topic of conversation, I think. And again, this is beyond the beginner level, but in my opinion, like this is a problem that if you talk to what are called Bitcoin maximalists, people that are just like, yo, Bitcoin is the only thing and everything else is a token and it's shit and whatever. The argument that those folks typically make is that like, well, it's the most decentralized because like anyone can mine. That was true in like 2011, like when you could literally mine Bitcoin on your computer overnight while you slept. And the energy consumption concerns that are now a big thing weren't an issue back then because it didn't take that much power to solve the cryptographic math problems that mine Bitcoin. The Bitcoin rewards that we were talking about with the halving, right? Those are being cut in half with the halving. So you used to be able to do that quite easily. And it was very true that anyone with electricity and an internet connection could mine. It was much more democratic back then. But I remember looking into it. It was 2014, I believe. I looked into Bitcoin mining at that time. And even as we were coming into 2014 off of that cycle, off of the all-time highs it set in January-ish of 2014, I looked into it and I determined then that it wasn't going to be profitable for me as an individual to start trying to mine Bitcoin, right? So that was 10 years ago, over 10 years ago. I ended up mining Litecoin and some other stuff with like a 5 GPU setup. But that was another thing. It was just fun to do. And I was proud of myself because electricity was the biggest issue. And I just plugged it into Seeds was going through this like Bitcoin startup accelerator at the time. So I plugged it in at the startup accelerator and nobody cared. And so we were mining Litecoin with that. Anyway, yeah, but so even back then, it was getting less democratic to mine Bitcoin. So yeah, that although we can argue that it's decentralized and that anyone who sets up a node can mine Bitcoin, as it's gotten, as more computing power has been required to solve the cryptographic math problems that generate Bitcoin, that has meant that more and more powerful computers have been required to mine Bitcoin, and that's gotten increasingly centralized. And like Tintop is saying, like that's happening in China. So that's not centralized, and it's also not democratic, and it requires a lot of capital to set up these mining farms at this stage of the game. And I actually saw an article recently that claimed that the price is going to have to go up to at least $80,000 a coin to allow mining to even be profitable at a super expensive with a fancy setup like that. So that, I mean, that's a driver of price increases as we've seen in the past, right? But that was interesting to see. So yeah, that's not centralized, or that's not decentralized. It's becoming very centralized. And then you'll hear criticisms of what are called proof of stake systems, like what Ethereum transitioned to with what was called the merge in September of 2022. And a valid criticism of that is that so Ethereum used to use a proof of work system like Bitcoin, which required mining, but they shifted to what's called proof of stake. So now they have these validators, and theoretically, anyone can be a validator if you put up, I believe, 32 Ether and you stake that Ether on their system. But like at this stage of the game, 32 Ether is really expensive. So yeah, like theoretically, that should reward people that were involved early enough to mine Ether when it was cheap, or people that, started buying it when it was cheap. But if that isn't you, then you're not going to be able to be a validator yourself. And then you're going to get involved in these pools like Lido. I've never heard the word said, so I'm not sure how it's pronounced. That's supposed to help with staking as a validator, but it's heavily invested in by venture capital firms like Andreessen Horowitz. That doesn't feel very decentralized. So what I'm trying to say is that there isn't a perfect solution. I should stress that decentralization and centralization exist on a spectrum. That is something that I try to like discuss at some length in our course, because like nothing is truly decentralized and nothing is purely centralized. So yeah, it's it's good to have an awareness of how centralized or how decentralized something is, and whether or not you feel like you can trust entities that may have control of that ecosystem in some way. But yeah, I'm with you. Like Bitcoin's not, it's not that decentralized if all the mining is now happening in China in a couple of farms. Um, Tintop says if Antpool and Foundry decide not to recognize the halvening, I like that you're using halvening because that's like the more old school term. Which fork do you think will flourish? I haven't heard anything about that, about not recognizing the halvening. Um, but I mean, the fork that I think will flourish will be the fork that is recognizing the halving, because that's going to be the mainstream. More folks are going to decide to do that, I would say. I mean, I would assume if this is happening that they're doing it because they don't want to cut rewards in half. But I mean, getting involved, I knew that that was part of the design in the first place. So yeah, I mean, I would say that certainly the fork that is going forward with the halving is going to be the more popular fork. Um, Tintop says sending in hostage photos takes the centralized exchange a day or two to process, and if you're doing withdrawal, multiple hostage photos and months of begging for your money. Yeah, that can be. So Tintop is talking about like how long it might take you to set up an account on a centralized exchange. But I know that Coinbase had been shifting so that, like, I actually set up another individual account on Coinbase like last week or something just to see how long it takes. And they actually let me set it up pretty quickly. It looks like they let you start buying and then they want to verify your ID a little bit later. And I know that they were using a service that claimed that it could do that within 30 minutes. Um, so I would say that centralized exchanges that are more focused on user experience, and arguably Coinbase is probably the best at user experience. They're trying to make that faster. Um, I'm not sure what you're talking about here, Stefan. Tintop says security is paramount. Use a separate wallet to connect to new apps. I've set up a couple Vault wallets that only send and receive from my other wallet and never connect to anything. Yeah, but the thing is, like your public wallet, that isn't what necessarily we need to worry about keeping secure. It's the key, right? So, there can be multiple wallet addresses associated with a single key, but it's the key itself that we need to keep secure. Um, Eve says, hello, just wondering, do you go over smaller trades in the course like the ones you just mentioned? Eve, do you mean like, what do you mean by smaller trades? Like lower amounts of money? Stefan says, sorry, but don't listen to her. Learn everywhere. I mean, yo, I've certainly never stressed that you should only listen to me. Obviously. Obviously, you should learn everywhere you can. Something I really try to stress is only trade according to your values and only trade with, only take actions as a trader that resonate with your understanding and your intuition. I've never said anything besides that. But that doesn't mean you shouldn't listen to me, because if somebody's coming in with the amount of experience that I have, there's probably going to be some value in that. Cody says, hello, everyone. Hello, Cody. Eve, if you're still here, let me know specifically what you mean by smaller trades. But I can say that, yeah, we can do anything that's necessary to help you in the course. I can shift to that now because it's almost time to go anyway. So, yeah, the course closes tomorrow, April 20th, just before midnight Pacific time. And it's meant to be Socratic. And by that, I mean, we want to meet you where you're at as a trader. And we want to help to structure the course so that it's helping you to progress wherever you're at as a trader. I'll put the link in the chat one more time. This is the link to register for the course. And yeah, so it's not like a cut and dry thing, because there are going to be people in the course who are coming from different backgrounds that have different levels of experience. And I don't want, the thing I want to be sure does not happen is I don't want anyone who feels that you're a total beginner to be scared off, because we will do everything we can to meet you where you are, especially if you're a woman or a person with a lot of feminine energy, regardless of your gender, because I've seen hundreds and hundreds of times at this point that often people that are women or people with a lot of feminine energy, you'll think that you need to know more before you should take action, whereas the dude next to you is going to be making aggressive trades with a lot less knowledge than you already have. And I want us to offset that. That dynamic is not contributed to getting the world into a good place. So please don't sell yourself short. If you're interested and you recognize that this is an important moment in time, which I truly believe that it is, regardless of your level, we want to help you learn, basically. So that's an important part of our philosophy, meeting you where you're at, and taking the Socratic approach to help you along, regardless of where you're at. So yeah, the course closes tomorrow, as I said, just before midnight. Eve says, trades with lower value coins. You mentioned that Bitcoin is so high that it's not especially profitable to invest. So just wondering if you go over smaller. Yeah, absolutely. Yeah. Um, yeah, that's important. Um, we've even looked at historical performance of, like, say if you put $1,000 into Bitcoin and $1,000 into Ether and $1,000 into seeds at during previous market cycles, and seeing how that's performing since. Like, And invariably, what you'll see is that $1,000 in the cheaper cryptocurrency is way, way more profitable. So yeah, we absolutely take a look at that. And that's like one of my, it's not like a trick or something, but it's like something that isn't so commonly known. Um, to the extent that I made a video about it not too long ago on YouTube and published it to make sure that, to try and make sure that more people are aware that it's the cheaper cryptocurrencies that are performing more profitably at this stage in the game. Yeah, so we definitely do go over that, Eve. Yeah. All right, y'all. Unless there are any other questions, I'm gonna let y'all go. Looks like we're good. Okay. Thank you so much for your time and attention. And yeah, if the course resonates with you, I hope to see you in the course. And if you'd like to help someone in need through seeds and get seeds, cryptocurrency, and thanks, that's the entire reason I do what I'm doing here, so that we can help more people in need and help to get us out of this trap that we're in the current economic system. So yeah, so that's there for you too. Eve says, yay, thanks. Thank you, Eve. I appreciate you. All right, y'all. I'll catch you later. I hope you have a good Friday and happy Bitcoin halving day. Okay, take care. Bye.